Hello, welcome to another episode of Investing Counterpoint. Today, we are talking about all the geopolitical events that we have going on. Actually, we're not talking about the geopolitical events. We're talking about investments during risk on, which is the state we're in right now because of all these geopolitical events. So we're going to talk a little bit about Bitcoin. As everybody knows, there's a big halving coming up. We're talking about gold, and we're talking a little bit about inflation, and the dollar currency. So we're going to talk about all these things kind of briefly in a risk on scenario. And so, Daniel, let's kick it off here.
We're in the midst of lots of interesting events in finance, especially from a risk management standpoint. We have the Bitcoin halving, an event which is basically superimposed on extreme events in the currency markets. We have the US dollar just going crazy against fiat currencies, just rising against the yen, Korean won, lira, everything, which is very unusual because at the same time, Bitcoin and gold are gaining on the dollar. So how does that work? Is the dollar becoming stronger? Is everybody just becoming weaker? What's happening here? And plus, we had a news story, an amazing news story, I think, where ministers of finance for Japan and Korea came to Washington to essentially beg United States to do something about the rising dollar because it's causing such massive pain. And it's causing pain for a very simple reason that a lot of the dollar debt in the world, a lot of the debt in the world is dollar denominated. I think many of these countries were fooled by long-term zero, like by zero interest rates, essentially. And they thought that they will last and they got all these dollar debt. I don't know if it was intended or not, but they're certainly kind of on the hook. And they're now begging to do something because their economies are kind of crumbling under the weight of rising dollar. They're trying to prevent any serious consequences. And so they came to Washington, essentially offered Janet Yellen to create some kind of cartel, or there was like in 1980s there was something called the Plaza Accord, where major countries agreed, well, essentially United States agreed to limit the rise of the dollar. But it was a very different time than 1980s. I mean, it was limiting the rise of the dollar to basically, it was actually more to favor United States then, because United States still exported stuff. Now it's very different because the debt load is just off the charts in the world. And while US can essentially print dollars and monetize their debt, nobody else can. So they asked to limit the rise of the dollar to do something. Presumably, this was a request to create some kind of intervention in the currency markets, or perhaps some verbal intervention, maybe even a request to cut rates, though I think that's probably asking too much. What was amazing to me was the response by Janet Yellen. Essentially, if you read all the news stories, the response was like this: no, we're not going to do that, but we allow you to defend your currency, which sounds very strange because how would they defend their currency? Well, they would sell some treasuries, let's say, to obtain dollars, and then would buy their currencies for dollars. Do you really need I mean, I thought that we're in a free market. If a sovereign country owns treasuries, it's free to sell it at any point and can manipulate the currency to, just like US can manipulate the dollar, but apparently no. Apparently, nobody balked at that because they didn't balk at Janet Yellen essentially saying, no, we're not going to help you, but you're allowed to try to protect your currencies in some way to intervene. And I think this news story is very, very telling. I'm sure
You don't think
I'm
that's a
surprised.
suggestion, like we're not doing anything, so go ahead and defend your currency, as opposed to getting permission for it? Because if they came asking
Well,
for something else, like they came asking for maybe a dollar intervention, like you said, at the extreme, maybe a rate cut, but she's like, no, but defend your own currency. I mean, is it permission or is it?
no, I don't think so. I mean, I don't know the exact wording that was used, but every news stories was like all the headlines. If you look at Reuters, Japan and Korea get a nod from Yellen for currency intervention. Okay, a nod for currency intervention is not like, hey, it's not a recognition of the fact you can do that, but we sort of affirm you can do it anyway. No, and then like another headline is, Japan and Korea get a green light from Yellen to do an FX intervention. I mean, so that's not the way it looks. If I were, perhaps it was phrased differently, but my sense is that the Treasury, U.S. Treasury, has some communication with the media, and if it was completely misstated by the media, maybe they would say, you know what, this is not polite. You should not write in the headline that we're giving a green light to a country to spend their own money. So I don't know, but I'm not making it a central point of my argument. But I will say that that is very telling to me. The dollar, people don't realize to which degree the dollar is an instrument of political power and how that power is wielded. It is not an economic concept. But going back to Bitcoin and gold, so okay, all these countries are suffering. The dollar index is just going rapidly going up while going down against the gold and Bitcoin. Now, the first thought is, okay, if gold is going up against the dollar rapidly, what is it doing in Japanese yen terms? I mean, it's just going crazy, right?
Yeah.
So gold is rising in all currencies, even the dollar. That's the way to put it. And the Bitcoin halving, right, emphasizes one thing about Bitcoin. So there's a big controversy in the Bitcoin community about what it really is. There's actually a book that just came out that I'm looking forward to reading by this guy called, his name is Roger Ver. He's one of the original proponents of Bitcoin, and he did a great deal to make Bitcoin popular. He's a businessman, not a coder, but extremely savvy. And so a few years ago, he had a falling out with the Bitcoin team, and they had a very different vision for Bitcoin. Roger Ver had a vision for Bitcoin as a payment platform, something that can handle the same number of transactions as like Visa. And for that, there needed to be some technical changes made. Whereas the Bitcoin core team, they thought about it more like digital gold. That, you know what, we're not going to worry about the number of transactions because right now there's so much stuff going on the Bitcoin blockchain. The transactions are actually expensive. To send a Bitcoin, you might be paying $10, $20. I mean, that's not a, you know, you're not going to buy a cup of coffee and pay a $10 fee for them. So it's rapidly, you know, and it's not always like that, but it is like that today, and it just shows that Bitcoin is not a kind of a money in the sense of transaction money. And Roger Ver and his team, they thought that it should be that. And I'm not going to actually say which one I prefer. For the longest time, I thought the Bitcoin team was definitely correct and Roger was not. Now I'm more ambivalent. I'm looking forward to reading his book and reading his case and trying to understand
So
why.
what's the effect of that? So basically, so Bitcoin is not a currency. It's in limited supply, which is why we're talking about gold and why we're talking about the rise of Bitcoin against the dollar, right? So the question becomes, is this something that is an inflation hedge or anything else because of the limited supply and the currency aspect of it? Is
Yeah,
that, yeah.
yeah, exactly. And when I say money, money has certain criteria, and then it's like a continuum. For example, today's U.S. dollar definitely doesn't satisfy some criteria of money. Like a money has to be a store of value. Dollar is not a great store of value. I mean, it loses a lot of value every year. But let's say gold is. So gold fulfills some criteria of money. Dollar fulfills others. Bitcoin fulfills others. But Bitcoin has gotten much closer to digital gold. And we can see that in some ways it's behaving like that. It is actually, you can think of it as like it's behaving more gold than gold. Why? Because as the inflation, and gold historically is safe haven asset for many things, but primarily inflation. At least it's viewed that way.
Yep.
But for a long time, when inflation was going up, gold was not, but Bitcoin was. And there was an argument made that, you know what, Bitcoin is the new gold, and gold is like done. You know, it's
Right.
not
But
needed.
yeah, but Bitcoin also crashed during the biggest rise of inflation recently, which is 2022.
Well, Bitcoin, I mean, I think that if you look at the crashes, you should think about more longer term. I mean, if you go from, let's say, the period when inflation started, which is when, you know, that's 22, right? And
Yeah.
then the period when inflation continues, which is 24 today, Bitcoin had a massive rise, just because it all, you know, it has these extreme volatile periods, but overall, if you take a slightly longer view, it had a massive rise during inflation.
Well, I mean, I guess, but we're also taking a point in time view. So if you took the point in time during, 2023, your conclusion is very different. So it just, I mean, the long period of time, I think we're still not through that yet. We'll see. But
Yeah,
yeah, I mean, to me, anything that's gold isn't volatile like Bitcoin is. And I know that volatility isn't a measure of like whether something can be a hedge or not. But when you can get one conclusion completely different than another conclusion 6 months apart, I think that's kind of that I think that's sort of telling in terms of whether or not something can be used as a hedge against inflation.
It's true. I don't disagree. And in fact, I'll present some chart in a minute showing that I think that gold will be a much better hedge, not just for inflation, but for many other things.
Yeah.
So I do think that gold has the upper hand right now.
Yeah, we agree
In
on
my view, it is a preferable investment for many things. But to be fair, when you're investing, right, I think that the short-term investing and long-term investment, you're frequently going to invest on some thesis that you have to wait for it to be realized. So I do think that in the long run, Bitcoin will be a good hedge against inflation. It might have down periods, it might not, but uh, inflation is not the only risk, though. That's the thing.
Yeah.
Gold is much more versatile, and I'm going to show you a little chart I put together
So we're
based on
talking
data.
about not just inflation, though. We're talking about geopolitical.
Exactly. So all kinds of, all kinds of risks. So there's a chart I put together using Excel here. Very simple. I took the data from 2018 to 2024, essentially recently, and we're looking at the behavior of gold and Bitcoin against S&P 500. But I only took S&P 500 down days. So this is what could be called downside correlation. Downside correlation. So the blue series is the 60 down day rolling correlation of Bitcoin to S&P 500. The orange line is the 60-day rolling downside correlation of gold to S&P 500. Downside being gold or being S&P downside, not gold. So what happens? How do these assets relate to S&P 500 when S&P 500 is down? That's the answer. That's the question we're answering here. And there are a couple of things that are there's lots of interesting things on this chart. One big conclusion from this chart is gold offers much better diversification. Let's forget about the inflation for now and all these important concepts. Just talk about what I want in a hedge, of course, is that my hedge is not correlated with my main investments. If my hedge is correlated with S&P 500 or NASDAQ, that is not a great hedge, even though it can do well in some periods. So I think Bitcoin has a place in every portfolio. I think there's maybe not at this price though. I think that it has to correct from here, but it's less versatile than gold, I think, and that's why. Look, gold has also been going up, and it's done very well lately. But overall, it exhibited fairly low correlation. I mean, you see the zero line. So for a long time, it was below zero. Then it went up. So there was a period in 2020 when it was, went up, but rapidly went down, and it always like hovers around zero, basically. Whereas Bitcoin very frequently goes way up in down periods, right? It goes way up. The correlation goes up all the way to like 5.6.
Yeah.
That's a huge, huge correlation. Essentially, what this means is that, remember, it's only down days. S&P is down, Bitcoin is down, gold is not. We're down very little. So this tells us a lot about what Bitcoin is. So, and I think that we see that I saw that too in 2023. For a period of it, Bitcoin's correlation did drop. It had some unique component. I think even we recorded a video with you at some point where I made a hypothesis that Bitcoin is turning into a less correlated, better diversifying asset. But what happens here, if you look like toward the end of 23, it basically its correlation dropped, and it looked pretty good, right? And then it started going up again, and it started going up toward the very end of 23, actually. And in the last few days, couple of weeks, we see this divergence where see the Bitcoin correlation, you can barely see it, is up. It's like 0.25, which is not insignificant. Whereas gold's correlation, even from the low level, it's going down. And the last few days, I would say, is actually the period where we could say that we're getting new idiosyncratic risks with Iran, Israel, all these things. There are new risks coming into picture, and we're seeing kind of opposite influence. Bitcoin seems to be going back to moving with, and remember, this is a 60-day correlation, so it goes back a couple of months. My hypothesis is that this has to do a lot with Bitcoin ETF. Bitcoin ETF, to my mind, is the worst thing that will ever happen to Bitcoin, because it basically puts it into a speculative kind of environment where it's very easy to manipulate, and it becomes much more like an investment in Nvidia or something, in my opinion.
Well,
Now,
then why
yeah,
would that? But why would that affect Bitcoin and not gold? Because gold has ETFs as well.
yes, it's true, but I think that gold had ETFs for a long time, and in fact, I think ETFs were a bad thing for gold too. I think that the reason that gold is breaking out and also improving diversification is that ETFs have been manipulated for a long time, but at this point, the spread, the divergence is so high, they're no longer able. Maybe Bitcoin will get to that someday, but like today, for example, gold trades. I think there's a $40 or $50 premium per ounce in Shanghai versus New York. That's incredible. That is unheard of because certainly people are buying and transporting it. There's a huge arbitrage. I mean, there's a lot of gold flowing east right now, and that's
So
actually very smart on the part of China. Yeah.
right. So there's a couple of things that would dissuade me from Bitcoin being an effective hedge here. Like first of all, when markets were down in 2022, like that was kind of like the big negative year, and it wasn't. I wouldn't say things were crashing. Bitcoin's correlation was very high.
Yeah, that's exactly it.
And then 2023, I don't really care what Bitcoin's correlation was. That was a good year, and it's like there's no risk. I mean, there's no risk, and if it's diversifying when you don't need diversification, I mean,
Well,
it's
we're
fine.
still talking about down days, remember. I
Yeah, no,
mean,
no,
there is
I
some
know.
signal.
No, absolutely.
Down days, even in a positive environment, they provide some clue as to what happens when there's a
I think
reversal.
it's less of a clue though, because there's no stress in the system. So to me, I mean, yeah, you want to see that anyways. I'm not saying you don't want to see diversification but I'm less concerned. Like that's less convincing to me than the 2022 period, and we'll see what's happening. We'll see
I
what the
agree.
markets do from here. Yeah. So
Yeah, and gold went below zero
yeah,
in 2022, so it did well. But also notice these last few days, I would really focus on this
the little
uh
down.
little down the last couple
Yeah.
of weeks, essentially. These last couple of weeks are risk. There's a lot of idiosyncratic geopolitical risk coming up, and I think that's where the divergence is happening. That's where gold is starting to behave more like risk asset, and gold goes back to being more of a hedge.
Right.
So, I mean, I don't know that you can draw like these massive heroic conclusions
No.
from this
Yeah.
one chart,
I think
but I think that you're right that clearly this part speaks to the fact that when bad events happen, Bitcoin does not hold up. Does not.
And the other thing that was
Now,
happening there, that, as we discussed, Daniel, was the beginning of the Ukraine war and inflation.
yeah,
So there are three things there that are happening. Markets going down, inflation going up, and geopolitical events. When
that's right
gold is
here,
doing what you expect
right
it
here.
to, yeah, right around there,
And
and
Bitcoin goes
Bitcoin
way
is
up in correlation.
yeah.
Yeah, you're right.
So
So
we'll see, because now it's starting to go back up in correlation again, and so we'll see what the effect of that is, because I think that's a really important observation.
so we have to watch that, and I think that it's important for our listeners to understand that inflation is not just inflation. It's never just inflation. There are many different kinds of inflationary scenarios. Very simply in economics, right? There's inflation from a supply shock, and then demand, a demand inflation. So those are different. You could also say something like inflationary boom versus stagflationary environment. Those are completely different. They're both inflation. So what this chart seems to show is that gold will protect you against inflation in both cases, because supply shock very frequently is geopolitical in nature. Like if there was a war in the Middle East, the massive supply, which is we have a mini supply shock now with oil and everything. So and gold is doing well in that, right? Will Bitcoin, we will see, but it seems to show that from a risk management perspective, you must you would think, should say you must, you would think, and you tell us in the comments what you think, right? We'd like to hear from you. If you disagree, right, write to us why you disagree, but you would think that this shows that gold is going to be a much better overall hedge, while Bitcoin would be a better bet on technology and long-term inflationary boom. So I think if like situation clears up, we have no risks other than inflation, Bitcoin will do very well. But I think that in this environment, with the elections coming up and all this stuff, there's so many different kinds of risks that are beyond kind of inflationary boom type risk. That and that's why I think gold is going up so rapidly,
You know,
because people are realizing that around the world.
yeah, I think there's one more point, and we have to be fair to Bitcoin here, where we've had this discussion for years, you and I, and years ago, Bitcoin was just so incredibly volatile that it would be up and down, double-digit percentages every day. So it didn't make sense as a store of anything. Today, yeah, the volatility is still high, but it's calming down. It's starting to act a little more. It's a new asset. It's not something, gold's been around forever. And so, it's a new asset. People don't quite know what to do with it. It has to stand a bit of a test of time before it can really be used as a hedge against really anything. I think right now it's still, people are still trying to understand how it behaves in these environments, and there's not enough data to understand it yet.
Well, I think that I would describe it as a tech investment like
Yeah.
Nvidia, with a very significant inflation protection component. I will say that I agree with many things you say, but one thing I will say that people who invested in Bitcoin, 5, 6 years ago, they will disagree with you that because of volatility, it's not a store of anything. I think they did pretty well. It's
Well,
just, it
no, they
depends
did.
on
No,
how you
but that's
view
an
it, right?
investment.
It
That's a
is
speculation. But that's a speculation. I mean, if I invested in Nvidia 5 years ago, I wouldn't have done as well, but I did great. I mean, it's still it's a speculation on something at this point. It's not moving just because of geopolitical events or hedges or anything else. We just saw that in the correlation charts. So I mean, I'm not saying people didn't do great. I mean, I wish I bought Bitcoin back when Yakov, if you remember, a colleague of ours from years ago, bought Bitcoin and was very very
bullish on
bullish
it.
on it, and I didn't do it. Daniel, I think you started a little bit later, but it was a
No, I
great
started much later. I didn't do it either.
great investment. If you call it an investment, you're buying something, you're holding it, and it went up. So it's a speculation at that time. And now it's becoming a little bit less speculative and a little more starting to behave like what you want it to. And it has, obviously if you bought it in 2022 or 2023 at the bottom, you did great, tripled your money or whatever, coming up to the $65 mark. But I just think that's tripling, when you're talking about moves like that, it's still hard to call it a hedge against inflation. It's moving so fast. Like there's no reason to triple, your money in 9% inflation at the extreme. So
Well, I think over the long run, this is where we might disagree. It is a good hedge against inflation, just not a great hedge against other types of events where I think gold is preferable now, just partly because Bitcoin had such a crazy run. I
yeah,
mean, it's just incredible. And I think that if it corrected significantly, it would be much better. I don't know that it will though, because
yeah,
money supply is rising and Bitcoin halving, right? It's a deflationary currency at its core. So it is much more deflationary than gold. Gold is, you always mine it predictably, year in, year out, more or less. Bitcoin's not like that. It's just going to stop being mined. So it's got this like incredible, basically tailwind that will overcome a lot of the other problems. And this goes back to the disagreement, I think, that the Bitcoin development team had with Roger Ver and some of the people who wanted to create a different kind of Bitcoin with a lot more transaction potential. It is really that's why I still think that I'm looking forward to Roger Ver's book, which I think is called Subverting Bitcoin or something like that. But overall, I think that you cannot have a transaction currency for small purchases that is deflationary. It just doesn't make sense. I mean, there's something called the Gresham's law in economics, in finance, which basically says that bad money will always displace good money in the economy. So the money that is inflated, the money that becomes cheaper, that people want to get rid of, paradoxically, is a very good money for small spending because people part with it very easily. Whereas the money that is deflationary, like gold, and to a much higher degree, Bitcoin, is not a great transactional currency because people don't want to part with it. They will part with anything else. Think about people in Turkey. What will they part with? Lira that like is in hyperinflation, or with gold, or with Bitcoin? Probably with Lira first.
right.
Maybe then with Bitcoin, then with gold, because gold is highly, highly deflationary. So I think that's the lesson here is that, both these assets are very interesting. We're in a very interesting environment too, where there's so many different risks. And it appears that gold is a more versatile hedge to me, at least.
Yeah. Well, great. Let's leave it there, Daniel.
Thank you, yeah.
Yeah, in the comments, let us know what you think. I know many people that are big in gold and Bitcoin are going to disagree with quite a few things that we've said, and that's okay.
Well, the gold will gold people will disagree with some things and Bitcoin with others. But yeah, subscribe to the channel, leave us a comment, like the video. We're going to be doing more content, and if you comment and you bring up some interesting points, we'll do a video on your topic.
Yeah. Thank you so much for watching Investing Counterpoint. See you later.
Thank you.